The United States Federal Reserve has paused interest rate rises as it waits for the effects of 10 previous hikes to filter through the economy. Jerome Powell says the decision gives the board time to make more decisions.
It's reasonable, it's common sense to go a little slower, just as it was reasonable to go from 75 basis points to 50 to 25 at every meeting. And so the committee thought overall that it was appropriate to moderate the pace, if only slightly. And there are benefits to that. So that gives us more information to make decisions. We may try to make better decisions. I think it allows the economy a little more time to adapt as we make our decisions going forward.
Joining us live now, Chief Investment Officer at the Motley, Scott Phillips. Scott, good morning to you. So Americans can breathe a sigh of relief this morning. What's your reaction to this?
Pete, good morning. The first time in more than a year they haven't taken the opportunity to raise rates, which means something. At the same time, Powell pretty much almost committing to another couple of rate rises this year, certainly the old dot plots, as we call them, where the Fed board members expect rates to be over the next 6 months or so, can suggest another 2 more rate rises to come. This has echoes, doesn't it, of the RBA's own actions. A lot of raises in a row, then a pause, maybe then back up again. The market is factoring in, by the way, a 25 basis point rise next month. So this is seen by the market as the opportunity to start to slow down the pace of increases rather than increasing every single month. Maybe it might be every second month or every third month for a while. We'll have to see what happens from here. Interestingly enough, too, what we would normally say, Jerome Powell said, the economy is stronger than expected. In any other time of the last decade, that's been unquestionably good news. This time around, not so good, because it obviously infers the inflation battle goes on. And that's still what they're laser focused on.
Well, I mean, just off the back of that, the mighty Tom Petrovsky on the program last hour, he mentioned that when it comes to unemployment data that's out a little later on today, if the unemployment figures, are a good way above 17,500, then you can just about bank on a 25-point rise next month. So, is that what you're reading?
It's an interesting one, mate. I wouldn't maybe put quite so much confidence in the unemployment numbers specifically as Tom, but I think what it would do is the RBA won't be shocked by this number unless it is meaningfully an outlier, much lower or much higher than we otherwise expect. In other words, what they're already planning to do is probably not going to be impacted by today's results unless, as I said, it's a big outlier. The reality is that the employment market remains really strong. It always feels a bit cruel to be talking about employment numbers and the strength or otherwise of the economy, knowing individual people are losing jobs, hopefully gaining some as well this month. But that's kind of where we sit. The economy is going very nicely in everything but the cost of living, which again seems like a strange thing to be able to say. But the economy is growing. Things are doing reasonably well, with one meaningful exception, Pete. And I am increasingly of the belief that we've probably passed the peak economically. If you look at David Jones' sales numbers leaked yesterday by the Australian, falls of up to 38% over the past couple of months. We've had a dead, we've had baby bunting.
That's big. It's not surprised, is it? People pulling back on spending right across the board. I mean, this is a really good point, and it's something that the governor's going to have to think about, right?
Absolutely, mate. And last week's GDP number, I reckon the smoking gun is there. For all the GDP numbers we focused on, the one number that really caught my attention is the national savings rate. We saved 20% of our income during the worst of the COVID lockdowns for obvious reasons. Plenty of government support, nowhere to spend the cash. Now we're under 4% again. In other words, over the last 12 months, the RBA has soaked up all that excess saving that we have been doing, and we're now getting down to tin tax. Commonwealth Bank numbers out a couple of days ago suggested that while spending was up at a household level, it was down on things that are discretionary, I should say, like clothing, entertainment, travel. There is a very big change going on. So I am increasingly, look, I don't do predictions or forecasts, mate, you know that. But if I look at what's happening right now, it does seem to me that what the RBA's tried to do for the last 12 months is now happening, and probably happening in a meaningful way.
Yeah.
Whether that keeps them on the sidelines or not, whether they think that's enough to bring inflation down, that's a big question.
Yeah.
But economically, I think we have passed the peak.
How thin is that line, though, when you talk about a meaningful way, Scott? How thin is that line between meaningful way, and tipping things over the edge, and that we head into a recession?
Mate, incredibly thin. The RBA itself talked about a narrowing path. Look, realistically, recession is measured as GDP, not as retail spending, for example, or household spending. So there are different ways we can measure these things. On a per capita basis, of course, we should remember we're already in a per capita recession now because the population is growing faster than economic growth. But I think you're right, mate. I think I still don't think it's likely we'll avoid a recession. If I was going to frame a market, I think it's probable that we won't, but it's increasingly likely that we will if you can keep those two thoughts in your head at the same time. The chances of recession are definitely increasing day by day because the RBA has been very clear. They will do, in their words, whatever it takes to deal with inflation. That infers a recession is on the cards, and frankly, they won't do whatever it takes to avoid a recession. They'll do whatever it takes to bring down inflation, and that's a really important distinction that we all need to keep in mind.
Okay. Scott, it is good to talk to you. We'll chat to you again soon.
You too. Thank you, Pete.